Hello everyone, I am Anisha Chitkupi and you are tuned into Stablecoins Uncovered. This is an exclusive interview series which is dedicated to exploring the dynamic world of stablecoins and their transformative impact on finance. And today we are in conversation with Tejas Arun. He is a CTO at Endl. And Tejas, maybe we can break ice by probably you introducing yourself and maybe a brief background into how you ended up here.
Sure. I'm currently CTO at Endl. It's a stablecoin new banking platform, and we provide virtual accounts, stablecoin rails for cross-border payments, and on-off ramps globally. How I ended in this space is pretty interesting. I was a techie. I was working at Intel and working on compute products, which also get used in mining of different cryptocurrencies. I started my journey somewhere around 2017, uh, where I started learning about Bitcoin and the currencies. But as and when I went deeper into the technicals of it, I understood that the traditional way how money moves from point A to point B and the value storage is not is it's a bit backward, and blockchain has potential to change that. And I've been through different market cycles over the past few years. So I kept I remained in the stablecoin and blockchain domain for a while, and I worked at a VC fund where I also got exposure to doing due diligence and investing into Web3 companies. And most recently, I am with Endl, building stablecoin products.
That's an interesting journey. You've been here for a very long time. So that brings me to ask you this first question. You have worked with this space because you worked with this space for a long time. How do you think stablecoins differ from traditional payment systems? You mentioned that you saw this worth in Bitcoin of making it easy for peer-to-peer transfer. So could you just explain how do you compare stablecoin payments and movement of money as opposed to traditional payment systems?
Traditional payment rails use nostro vostro account system, which is money doesn't really instantly move from one account to another account in terms of cross-border payments, but it's mostly messaging and settlement happens a bit later. So it takes a lot of time to actually do the settlement. It's a pretty slow process. Multiple parties are involved. There is FX charged by all the entities and intermediaries in between. So the cost is like anywhere between 1 to 6%, depending on which corridors are there. If sending from US to India, it's a bit commoditized because it's the biggest remittance market. But traditionally, for difficult markets, the settlement time can take up to a week as well. So, in terms of speed, stablecoins are as fast as the blockchains that they are issued on. So stablecoin like USDC, USDT, Ripples, RLUSD, they're issued on different blockchains, and they are as fast as the blockchain itself. If the settlement time is quicker, for example, Base or Sui or Solana, they're pretty instant. But Ethereum, it takes up to 30 seconds. It can take more time depending on the network congestion. Although the cost is pretty low uh, today, the cost of moving stable coins or doing any general transaction is under $1, most likely. It used to be quite high. It used to be like 10, 20 in the DeFi summer of 2020. It used to go up to $200 if one has to perform a transaction, but it has significantly come down. So traditional methods are slow, expensive, full of intermediaries. Stable coins are not. There is just an issuer as per the current rules, the the stable coins are backed by USD cash or US Treasury bills, the ones that are regulated stable coins, and they can move instantly across borders. But when compared to traditional systems, they cannot easily replace the local payment methods like Pix in Brazil. That's pretty instant. It's easy. It doesn't need people to learn anything new or know about blockchain, and it still has the local protection. The payer or the investor, whoever is using that, they are still protected by the local rules. So stablecoins are pretty effective in cross border, but not as much in local payments if compared to traditional system.
That sets the tone for our discussion today. And here's a follow-up question that I have for you. You mentioned during the DeFi summer, the gas fees or the transaction fees were very high. Don't you think that adds a bit of volatility and a bit of difficulty for users who may be frequently transacting for cross-border payments, as opposed to we would know, okay, it's $10 flat for certain amount of transfers if I use traditional rails?
This has been a bigot. This has been one of the biggest debates in blockchain domain, that gas fees are high, and so there have been new blockchains now. Tether is launching in partnership with another company, or they have likely funded that company. Stable.xyz is a new blockchain. It's specifically created for stablecoin transactions. They the gas token itself is going to be stablecoin. Uh, Stripe is working with Paradigm Capital in the US. They're creating uh, Tempo. It's a new blockchain specifically created again for stablecoin transaction. Any stablecoin can be used as a gas token itself. So we have moved from the conversations that is it going to be Ethereum or expensive blockchains to a new a new debate that it has taken a new shape or form, that should people stay on publicly neutral blockchains like Ethereum, potentially uh, some more blockchains. Solana is still, uh, is still a good public infrastructure contender. It has moved from there to that the new blockchains which are created by companies. Circle is creating Arc blockchain. So the whole debate has taken a new form, that earlier it was about gas fees. Now it's about who is controlling the infrastructure. uh, how much speed is it going to be? Or should we look at new blockchains like Sui or Aptos, which are developed on entirely new technologies called Move language? It was originally developed by Facebook, but it's different than what Ethereum and other blockchains are built on. The technology is called Solidity. So for frequently transacting customers, today there are limited options. The space is evolving. VCs are also putting up a lot of funds into these new infrastructure projects, which promise that the cost would be negligible, but then eventually it would take a new form that, hey, the infrastructure is not neutral, it's still controlled by someone.
So the next would be, while I see that there would be competition between the existing L1s and the new stablecoin friendly or specifically for stablecoin transferring L1s or blockchains. How would you, while there's an infight or perhaps a fight for the market share or the stablecoins that move in this space, how do you think when stablecoins are processing so many transactions, maybe in trillions right now, how are they going to be challenging and reshaping the existing rails like Visa and MasterCard?
Visa and MasterCard are orchestration networks, basically. They have at one end the bank accounts or banks or issuers which issue the card, and on the other end there are shops or merchants who collect payments. So when we pay at a point of sale in a shop, we just tap the card, but there is an obligation for the issuer to settle, that actually pay that money to the shop and deposit that into their bank account. And these transactions are quite complicated. I might have a card not from even a bank, maybe from a fintech, which is in a third world country, and I might be paying a, for a coffee in maybe Canada. So MasterCard and Visa are the orchestration networks which make sure that the money is paid by doing the right authentications, and then the money gets delivered to the intended recipient. All of this money has been moving through banks for all the time that we know about, and it uses the same cross-border infrastructure that we know of and we have been talking about. Stablecoins remove all of this friction. They can just move money from any place to any other place instantly, so that the recipient doesn't have to wait. As per the
Mhm.
latest, if you check, Visa has a dashboard. They publish on-chain analytics. Uh, as per the Visa dashboard, the overall transaction volume of stablecoins is close to $43 trillion in last 12 months alone. This includes a lot of funds moved by exchanges, professional market makers, fund managers, but a lot of those are also in payments. And recently, a company called Rail in the US got acquired by Ripple. They were moving a lot of business payments. So for Visa, which has been moving, or MasterCard, which has been moving smaller amounts, if you see their average transaction value, it's close to $50 to $60, like shopping, coffee, the handy payments, not like large business payments. For them, it's really important that how could they settle money instantly. If the blockchain infrastructure becomes cheaper and cheaper, and if the cost eventually falls down to zero, they can actually settle transactions globally almost at zero cost. As soon as I pay, they would have that money delivered instantly. This improves the overall ecosystem, that the coffee shop owner would be getting that money in 7 days, if or even 2 weeks, when the he's located in a different country from where the card is issued. Now they get that money instantly. So it's a magic, in my opinion. It's completely changing the world.
Okay. But you did earlier mention some programming languages, like the ones which are used to build things on blockchains, like Move that you mentioned for Aptos. You mentioned Solidity, and perhaps there's Rust for Solana. Now, shall we move into a more technical space? And I would like to invite you to explain concepts like programmable money and smart contract integration. What are these concepts, and how are they making stablecoins more useful going forward for businesses and consumers?
Sure. So money, apart from the digital movement itself, that money is taken from one party, it is given to another party, all the disputes or conditions in between are governed by the agreement between the two parties. For example, if I'm renting a house and I'm not paying the rent on time, maybe they can force me out of the house. Or if I'm booking a flight, if the flight keeps getting cancelled, then the company would take their own sweet time, maybe 2 weeks, to get me the refund. There are different ways to condition the money, in terms of conditional payments, putting that in escrow, performing refunds, splitting the revenue. If two different partners are working together, they might want to do the revenue split. Let's look at the subscriptions. Like we pay for most of the subscriptions in advance. It can be made conditional that there are products like Superfluid. You can check that. They stream money in real time. Like every second, the money gets streamed. And if we want to stop subscriptions right now, even the employee payments can be streamed in real time rather than giving all the money at once. So money can be programmed in different fashion depending on the business or retail use cases. And also the disputes are covered by agreeing to some terms and conditions between the parties that are transacting. So smart contracts uh, can absorb this complexity, and they can the logic can be coded into smart contracts, and these things can happen automatically. If we want to do revenue split, as soon as customer money comes in, I get my part, the other party gets their part. If the flight gets canceled, we can build complicated logic that there can be data about the flight, that hey, if flight is flying today or is it canceled? If canceled, refund the money automatically. There is no there Eventually there will not be involvement of parties that need to prove that this this really happened, and then the money has to be refunded. It can be automated. You might have heard of projects like Chainlink. It's an Oracle helps bring outside data for consumption within the blockchain domain. So all of these things together can be combined, and money can be programmed to act in a certain which is compatible, or all the Ethereum virtual machine blockchains use that. Solana uses Rust. There is new language called Move, which is used by Aptos and Sui kind of blockchains. So all of these programs can be built, and the intermediaries, the inefficiencies, the time taken, even the disputes, all of these can be avoided eventually.
So you mentioned about disputes, and when there are disputes, we need regulations to sort of assist us in finding out who's right, who's wrong, and how do we solve them. With respect to that part, you know that US has come with a Genius Act this year in the summer, and we have Europe's MiCA, which has been in existence for some time. How do you think, and they are very different in how they function. MiCA has been more restrictive, and Genius Act has been more supportive. How do you think the regulations going forward should strategize, or countries going forward should strategize on um, how to mainstream stablecoin adoption? So, what kind of regulations do you think can work in future better for various geographies?
There are various political angles as well to this question, but I would not comment on those. I'd stick to regulation, consumer protection, and how the regulation should be. So, as of now, there is over 99.5, close to 99.5% supply is of US dollar stablecoins, which in real life is 75-25 ratio, generally, roughly. That 75% is US dollar, which is used in trade, 25% is non US dollar currencies. There's a huge imbalance right now. And there would be players that would come in to have this imbalance taken care of, and it would come to the natural use. It would try coinciding with how it is right now, maybe 75-25, or if there is more adoption of USD, then US dollar adoption will increase. So, and this is going to be a bit longer answer, so please bear with me. So, the Genius Act tells that the US dollar should be backed by USD cash or US dollar treasury bills. These are the two options. And all of this has to be done via a suggested or a federally compliant structure. and the money has to be kept with a bank or custodian, and equivalent amount of stablecoins can be issued. Once they're on chain, they can move freely, and there are rules for redemption. Like when somebody comes back, they have to get equivalent amount of money back. When they give $1, we have to give them $1 back in their bank account. So these are the basic rules. And since the global trade is mostly in US dollar, uh, the demand has been disproportionate, and most of the other countries do not have regulations, and they have been averse in regulating this because if we look at sub-Saharan Africa, LATAM, most of the Southeast Asian countries, they use stablecoins in trade. They use US dollar in trade, a part of which slowly, is getting replaced by stablecoins, specifically in freelance market or smaller businesses. They are opening up to accepting stablecoins because they can hold dollar they can have exposure to dollar as long as they want, than simply going back to their own currencies, which are devaluing over time. So Mika is getting restrictive for the same reason that other countries are, because people want more USD than the local currencies, wherever these currencies are devaluing against US dollar. So the best way is to at least maybe copy paste these two things, that it should be backed by the local currency, cash, or local treasury bills, whatever the government issues. The interest rate differs. US, it is 4%. In different other countries, it can be 10, 5, 20%, depending on their local economy. But these things can easily be, I should say, copied. It's no brainer. And then uh, the issuers would differ. In the US, the issuance is completely private right now. All the private players, banks, etc., are issuing. But in the low trust countries, those could be government or government regulated issuers fully, that there could be limited parties who can issue those stable coins. For example, in Indonesia, there can be IDR stablecoin issuers. There could be private parties, but in the future, when they regulate, even governments can issue their own stablecoin, or even CBDCs, right? So, more or less, I think the base framework would remain same, and they would try to bring this to a natural equilibrium, how it works with US dollar currently, 75-25 kind of ratio.
So my next question follows on that ratio. We know that most of the stable coins, like more than 99% of them, are US stable coins. And we recently also heard that Tether is coming and becoming US compliant stablecoin issuer with US 80, if I'm not wrong. So which geographies or regions do you think benefit most because of the kind of setup that we have today? And my second would be, which economies do you think would benefit in terms of cross-border payments and for maybe financial inclusion because they have been unbanked or underbanked for so long?
There has been a lot of VC investments, a lot of money has been poured, a lot of companies have been built, specifically in LATAM and Africa. And the accelerating factors are the usual suspects, either the devaluing currencies, or they did not have the right banking infrastructure. They just leapfrogged, Africa leapfrogged from having no phones to mobile phones or smartphones. There was not a time when they were holding, when they had like landline phones. That time was like skipped. So similarly, in places of broken banking infrastructure, they are leapfrogging from not having the best banking infra directly to holding stable coins, and they're loving it. So LATAM and Africa, these two are the best, or the most, or the biggest ones, which have a lot of users. Southeast Asia, whereas there is complete absence of regulations. It's if any players are operating, it's mostly registration. There is no license as such, or complete framework. India tops that list. India has about 10% of the population, 155 million users, know about crypto in some format, or they have interacted with it. All the exchanges in the subcontinent, you can check their numbers. They have uh, they have more users than the stock apps, stock or bonds and trading. Crypto has a lot more users. So the adoption is growing, and these geographies would be most beneficial. Latam and Africa have seen it, they are using it. GCC, UAE has been really pushing. They have stablecoin framework by the central bank for the UAE stablecoin, which has similar requirements of having reserves and getting a license with the central bank. So the next would be the unregulated ones. They will have to give a serious thought that how to do this. Maybe bring compliance for issuing local stablecoins so that uh, the there would be less exposure to dollar. Yeah, these are the ones. GCC is at par with the developed countries, but then Southeast Asia, Africa, and Latam.
So those regions have a lot of potential and a lot of growth that they can witness from the influx of the entire stablecoin ecosystems. The last question in this serious discussion format would be, what risks or misconceptions do you think surround the entire stablecoin discussion and around blockchain payments infrastructure? And how do you think those can be addressed so that people who are either regulators or banks or consumers can better use these systems?
The first and foremost thing is the regulation itself. If the governments or the regulators that the payments or financial institutions rely on, if they are not regulating that, it's left hanging. They do not really have an idea how to do things, when to do, is it right to take that step. So first and foremost is, uh, in absence of regulation, in most of the places it is termed as highly risky, even scams, uh, even if those are fully backed stablecoins. So the the biggest risk is actually if there are any reserves or not in the background. Like there used to be algorithmic stablecoins before, which did not have any reserve requirements. There are brilliant designs like Athena, which uses a delta neutral setup. They spot buy the Ethereum, which is a long position, and then they short Ethereum perpetually, which creates a delta neutral setup that the value is always pegged to the dollar. So these are brilliant designs, but they're not fail safe, you know, until proven otherwise. They can, like what happened to Terra Luna, the UST stablecoin, which was part of the ecosystem that really went to zero. And there have been stories of all the algorithmic stablecoins not doing well, getting depegged. So for now, given the current condition, when any holders or investors want to use stablecoin, they should really go for fully backed stablecoins. USDC, uh, USAT is the one, which is the new one specifically designed for the US. And it in Mika, Tether is not accepted right now. So depending on the region where they are and their local regulations allow them to hold those stablecoins, first look for reserves, and those reserves should be publicly verifiable. There are websites or there are audit reports. There are a bunch of auditors which independently publish these reports that, hey, these are the holdings. So that is the first risk that anybody should consider while holding stablecoins. Second is the regulations. They need to be aware of taxes, any tax deducted at source. Third, in my opinion, is if there is frequent exchange between fiat and stablecoin, stablecoin to fiat, if, if somebody has to frequently move, then they would lose a lot of money in on-off ramps, depending on where they are. If it's US, it's getting commoditized very soon. If it's outside the US, there's going to be a cost and the value would be lost. Additionally, while using stable coins, most people just don't hold it. They want to use it in DeFi. They want to lend, they want to earn interest. So there are going to be hacks. So they have to be using safe products which are audited, which are around for long enough so that people trust there is enough amount of liquidity. So that is another risk. And go for hybrid structures. That uh, it's not that only a specific type of stablecoins would succeed. There can be a hybrid approach, like holding stablecoins issued by different issuers than just putting all eggs in one basket. USDC depegged when Silicon Valley Bank was it went down, So they were holding close to $3.3 billion worth reserves with SVB. And proportional to that, the value went down. So it's useful to have different stable coins than just having one. Yeah, these are the specific risks that I can think of.
So do your own research, keep all your eggs in different baskets. I think those have been the mantra for most of the investors who have been doing well on the markets. So this ends like the serious part of our conversation. Moving on to a fun round where I ask a bunch of rapid fire questions to get funny answers out of people who have been working in this space for a while. So don't stress your head, don't stress your brain. You just have to answer as first thing that comes to your head when I ask these questions. So if stablecoins were a superhero, what powers do you think they should have?
It's like Flash. It's like instant, can move from one place to other. And more like Batman as well, because they are helpful for people who are really in need. So yeah, Flash and Batman, I believe.
Okay. If you could describe the future of payments in 3 words, what would those words be?
Self-custodial, trustless, and instant.
Okay, they're mirroring exactly what blockchain technology holds for. Um, the third question is, which legacy payment company do you think, if was pitted against stablecoin issuers, they would have a match that we could see some fight with between them?
This is a difficult one. Maybe JP Morgan. They're a big institution. They are in crypto for a long time. They also own a lot of critical infrastructure. You can do more research about this. But yeah, that's the one that comes to my mind.
Okay. Last but one question. If your phone could support only one payments app for 1 year, which one would you pick and why?
I consider all the wallets as payment apps. They just allow sending money anywhere. So MetaMask.
MetaMask. Okay. And the last one question. You have to finish this sentence. I'll leave it with dot 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 for you to finish. Stablecoins in 2025 are dot dot dot.
Necessity.
So you consider them to be very essential for this year.
Absolutely.
It's been an absolute pleasure talking to you, Tejas. Thank you so much for taking out the time and being on Stablecoins Uncovered.
Thanks a lot. Thank you for inviting.
Bye and take care, everyone.
Have a great day. Bye bye.